math is an issue, and these people are wondering how they're going to be economically viable without raising prices or without getting smaller or something like that. And so they haven't grown into these massive valuations that these major investments from SoftBank, for example, have put on the heads of these companies. And so, they're sort of too big for their britches kind of thing.
And were there just too many?
Too small.
Too small for their britches? Yeah. Were there just too many, though? Because even companies that look economically pretty good, like Zoom, you might argue Pinterest, they ran up, kind of came down.
Yeah.
It's not just the companies with dubious business models that have been sort of performing oddly in this market, but there's more IPOs that were coming to market this year than ever before. Maybe it was just too many.
Not too many. I think it's just the valuations. These private valuations, how long it took to go out, are just too high, and the retail investors are not having any of it. And so I think it's just sort of that bubble atmosphere in Silicon Valley, especially after SoftBank came in with all that money. It's not to say that some of them aren't great businesses. I mean, Peloton's a really interesting business. Zoom is a great business. Pinterest is a great business. But they're just not worth that much. And I think that's the disappointment. So I had like some people from all these companies like, I was going to buy a big house. Now I'm not. They disappoint. There's that, I think I'm worth this, and I'm actually worth
They're still going to buy a big house, though.
Yeah. There was a great lead in a CNBC story, I think it was Alex Hall, I'm not sure who wrote it, that said, WeWork decided we were worth, it was Vice deciding it was worth $3.6 billion when it's buying.
Alex Sherman, yeah.
Right, Refinery 20. Actually, Sherman, great lead, said, I've decided my house is worth $278 million. And it was like, it's like that. These valuations are just made up and fictional.
Given the debate that's going on right now in Silicon Valley around direct listings, do you think this conversation would be happening quite the same way now if direct listings had been used by more companies?
I don't know. I think the price is what it is, and everyone can read math, can read a spreadsheet that's making these investments. And it's not, it used to be it's just popular and people bought into it, but I think most people are really soberly looking at these businesses and where they're going. And I think that's it. It doesn't mean some of them won't be more valuable. They've got to grow into their value, I think. Just like I was mentioning earlier, Instagram, if they spun it off, say, in a regulatory fashion, or AWS, those grew into they're massive companies. They'd be great for IPOs or spin-offs. And that would be a massive boost to the system, I think, if like an AWS spun off. And shareholders at Amazon and shareholders at Facebook would be thrilled.
We've been talking about it for so long, but are you sensing any interest in those giants doing anything like that?
I don't know if there's going to be interest or maybe compelling reasons, including antitrust investigations and things like that. And so why not use it, think of it as an opportunity rather than a negative?